What happens when we run out of Bitcoin? When you can't actually find somebody to lend you Bitcoin? What happens to IBIT? What happens to the other ETFs? What happens to the COMEX, the futures? What happens to the perps on all of these exchanges? Coinbase, Binance, Bybit, Kraken, just go right down the road, right? There are derivatives trading everywhere. Deribit, which Coinbase just bought, gigantic options exchange. This is again, ginormous complex of derivative exposure to the underlying asset of Bitcoin. And at some point, Bitcoin will become hard to borrow, right? Because just you can't continue to grow in an asset that's infinitely scarce. Those two things are antithetical to each other. So what I'm suggesting is we are running headlong into what will be the next big inverse big short.
Hello, welcome to the Money Adjustment. I'm your host, Dr. Marc Kramer, DC. I am a chiropractor who loves investing and trading. Are you interested in what's moving markets and your money? Great. Me too. Let's get started. I love when I interview you because when I actually go back and can actually watch what we discuss and reinforce a lot of what you're talking about. Because I think if you're just hearing it for the first time, maybe a few things are over your head or something gets past you. Maybe you don't understand what a short is. Maybe you don't fully understand the Bitcoin aspect of it or the derivatives component, because there are a lot of moving pieces here. But if you listen to it, there's like a holistic nature to it. And it's readily available for anybody to understand. It's not like either one of us is trying to hide something from anybody. Quite the opposite. We want everybody to be as educated and aware as they possibly can be, so that they can appreciate the full gravity of the situation and to take preventative measures or do what makes sense for them to do. Hello, everyone. Welcome back to the Money Adjustment. I am very grateful and happy to have one of my favorite returning guests, DarkSide2030 _. I stumbled upon his spaces, Bitcoin Today, and one of the spaces, there's a few different ones, but DarkSide hosts the Bitcoin Today. And I stumbled into one of these spaces and I was hearing things that I wasn't hearing in other sources of media that I take in, that I found very fascinating and interesting. So I asked DarkSide to come on to do a podcast with me, which he graciously accepted to do. And when he came on the first time and we had a conversation, it just opened up more and more questions for me, and I got more and more interested. So he came back on again. So I actually have two post podcasts with Dark, and if you're interested in listening to those, they're very informative and educational. And I encourage people, like, of all the podcasts that I've done, those are the ones, especially if you're interested in Bitcoin or cryptocurrency, more Bitcoin. This is really more Bitcoin focused. If you're interested in Bitcoin and money, and even, we're not political, but I think there's political implications or larger things happening that it's just interesting to see where Bitcoin fits into all of this. So I was happy to get DarkSide on again to help walk us through these things together. And one of the things that I've been hearing in the spaces this past week is DarkSide has been making a case for, you know what? I would like DarkSide to just bring him in now and present his case, and we'll dive into it. Go ahead, Dark. Glad to have you.
Sure. Glad to be here, Doc. Thanks. You know, this is one of my favorite podcasts. I think you do an amazing job of boiling down some complicated issues and making it available for the small retail trader, the average investor. And I appreciate the opportunity to get my message across to every community. So thank you so much for having me. So yeah, I've been working on this thesis regarding Bitcoin derivatives markets, what we'll call the paper Bitcoin market, and how does that really fit into a traditional Wall Street model, right? And where I've landed is what I kind of am coining the inverse big short, right? So let's call it the big long. And the reason why I'm going there is because when we talk about derivatives markets, right? One of the absolute paramount traits of any well-functioning derivative market is the ability to short the underlying asset. Right now, that might not make sense to a lot of people, but let me kind of walk you through why it's so important to be able to freely short the underlying asset. It's because in order to have a free functioning derivatives market, let's just look at, you walk in to my over-the-counter desk and you own 10,000 Bitcoin from $1 of Bitcoin. And you say to me, I'd like to reduce my risk, right? I'd like to buy puts or the right to sell Bitcoin if it were to drop. I still want to maintain upside Bitcoin exposure, but essentially I'm looking to buy insurance on my Bitcoin position because I own it for $10,000 and now it's worth $1 billion, right? So when you come in and you say to me, well, Mr. Trader, what type of insurance can you sell me? And I say, well, look, I'll sell you insurance for 1 year at, I don't know, let's say $85,000 a Bitcoin. Okay, just taking a number out of the hat. And you say, well, I'd be willing to buy that insurance. What's it going to cost me? And I say, well, it's going to cost you, I don't know, $500,000, right, to buy this insurance policy. So what's really happened there is you've bought insurance against your Bitcoin, but I have assumed downside exposure to the Bitcoin price. Because if Bitcoin drops below 85,000, I have to make you good at that price. I've sold you an insurance policy, right? Now, in order to do that, I need to be able to either short Bitcoin or gain downside exposure from someone else who's going to short Bitcoin, right? So even though this is not an economic transaction around, I want to get short Bitcoin because I think the price is going lower, this is a transaction around, I'm selling insurance and I need to protect that insurance as the derivatives desk by gaining short exposure to Bitcoin. Okay. Now,
Yeah. I don't want to ruin, I love your flow, and I just want to let you know that I love how you're framing this from the insurance aspect of it. Because I think, myself included, we're often thinking of Bitcoin, many people do, and mindsets are shifting around it all the time, but a speculative asset, something that you just keep a small position of your portfolio, and something that you, it's like people will trade the actual asset. It's the asset itself, or more likely the derivatives around it. And they're just looking at it. And I certainly was too, until you just said it that way. Because my first impulse was, if you short it, that feels like you have a negative sentiment on it. But the reality that you're describing and illustrating for people very well is that this is a protective mechanism. Because let's say Bitcoin has that self-fulfilling prophecy that and it manifests the way that the believers and bulls believe that it will, or your 10,000 now, or your 100, whatever allocation you have to Bitcoin now, could be worth millions in the future. And so if you're thinking to yourself, well, I don't care if I lose $10,000 or $20,000, that's fine. Maybe that's your speculative bet. I'm just talking about the people who are taking that position on it. What happens when it becomes this larger asset, that it's not what that number once was, and it has maybe even grown outside your position allocation initially, where now, and you don't want to sell it, then how do you protect yourself against that downside risk? So
sure.
I don't want to veer too much off of, but I wanted to make sure that I'm getting this.
I think it's really important for the audience to understand that derivatives are not really intended for speculation. While there's many people that do speculate in derivatives, the real purpose of derivatives is risk management. And the example I just gave you is one of risk management, right? Take this client that we're talking about that went from a $10,000 position to $1 billion position. He wants to manage the risk. If he sells Bitcoin, he's going to have an enormous tax bill. So he's not looking to sell Bitcoin. He may be borrowing against Bitcoin, right? Taking loans, which would be tax-free, but he certainly wants to limit and ensure the downside risk. And when he comes into the Goldman Sachs trading desk and says, look, I need to ensure my downside risk here, if I lost 10% or 20%, I'm okay with that. But if I lost 80%, I'd be crushed. right? So he comes into Goldman Sachs, he asks for a quote on this insurance policy, which is the way he's perceiving it as a risk management tool. But the Goldman Sachs desk, right, they're looking at this like, okay, I'm going to sell an insurance policy. I need to hedge my exposure to my insurance policy that I just sold. And they're going to need to short Bitcoin or a Bitcoin proxy. But either way, that's going to end up down the road into a short in the underlying asset, which is Bitcoin. So now we have a short in Bitcoin that has absolutely nothing to do with speculation on price. It has to do with the natural mechanisms of maturing markets, which is risk management. And
I hate stopping you, but part of the reason I stop you is I love where you're going and I want to build off it and make sure that you get that in and people are digesting, including myself. So when I hear something, I'm like, man, I really want to make sure I understand this, because the way you're presenting this is, and you said it, and I'm just basically reiterating what you said to me, is that people are shorting it not because they are betting against it. It could even be quite the contrary. They're strong believers in the underlying asset class. They have to protect their downside risk. Anybody who's into investing or trading, like, I think the longer that you pay attention to markets, the more you realize, even though it might have been a get rich quick, something that brought you in or just earn a living or survive or whatever the case may be that introduced you to the market, you realize, but like Jamie Dimon, he recently said something. He's like, I'm a risk manager. It's like, they're not these bankers. And you might have strong, I don't want to get into that aspect of it, but just in the general sense that this is more about risk management than we're speculating on price, even though I think the case that we're building up to here is an interesting thing with regards to what might actually happen to price because of this inherent necessity.
yes, so I think that's really well said. So when we talk about options and we talk about derivatives, we first have to step back and understand that we're not talking about the speculative side, although that plays a role in all of this. What we're really talking about is risk management. And as Bitcoin has become an institutional product, right? And we saw that with the launch of the ETFs. We've seen that with the BlackRock's commitment. And all you have to do is look at the Bitcoin treasury companies and the billions and billions of dollars that are flowing into the Bitcoin complex, right? This has become an institutional product. And the one thing we know about institutions is they're all about managing risk. Jamie Dimon, whether you're a bank or an insurance company or you're a hedge fund, you're in the risk management business. So that's led to the ever growing derivatives complex around Bitcoin. So if you can understand that we have this gigantic derivatives complex built around an asset like Bitcoin, we also have it around gold, we have it around US Treasury bonds, we have it around NVIDIA, right? All of these assets have ginormous, if I can make up a word, they have enormous derivative complexes. Bitcoin arguably is growing faster than I've ever seen. I've never seen anything like this in my 25, 30-year Wall Street career. Nothing like this has ever happened, right? To see an asset go from basically a few dollars to trillions in a very short period of time, then gain institutional adoption, and then all of the derivatives, the futures, the perps, the options markets, the upstairs markets, like the example I just gave you will be a derivative contract between a wealthy, high net worth individual and an over-the-counter trading desk. Let's throw Goldman Sachs, Susquehanna, you insert your bank here, right? And that derivative contract doesn't show up on any exchange. It's literally a contract between two parties, right? So, the amount of short interest that is growing in Bitcoin, again, not because people are betting against a downward price move, but because people are hedging risk. Okay. That number is growing exponentially. Now, at the same time, Unlike any other asset Wall Street has ever seen, Bitcoin itself is infinitely scarce and you can't print more, right? So let's take any other asset that you can think of. US Treasuries, well, we know they're always printing more of those. Look at our national debt. Gold, gold is rehypothecated, countless times. We don't even know how many claims are available for each ounce of gold. And the gold supply is inflationary, right? There's more gold mined every year. You want to take Nvidia. If the stock went too high, right, what happens? The company comes out and they sell more stock. And if there was a short squeeze in Nvidia, like there was in GameStop, look, how did the GameStop short squeeze come to an end? Well, a few things happened. The Wall Street cabal turned off the buy button. That was step one, right? That sort of halted the squeeze. And then the company came out and sold billions of dollars worth of GameStop stock, and they increase the float, right? Well, Bitcoin doesn't have any of those options, right? Bitcoin is infinitely scarce. There are only 21 million that will ever exist. We can assume 4, 5, 6 million have been lost.
Okay? Right. All right. Hold on. This is why I had you on. And I have to stop you because this is like the epiphany for me, because I heard you say it in the spaces and I kind of like, I get where he's going with, but there's something about it. There's a key component to it that I'm not fully appreciating. And I feel like it just registered to me now. And it's this, and you used NVIDIA as the example. So I'm going to use NVIDIA as the example. I didn't realize that Misty wasn't just a Bitcoin specific type product. It's a yield max strategy. It's a product from would they be considered a hedge fund or an ETF?
No, yeah, they're an institutional structured product company. MSTY is an ETF, which is a structured product.
Right.
Yes.
But they have more than one ETF. They have an NVIDIA ETF. They have a ton, right? So to your point, just to see if I got this, is that with NVIDIA, again, it's going to sound like I'm repeating back to you what you said to me because it's like it's finally hitting me. With NVIDIA, not that this is going to happen to NVIDIA, but with NVIDIA, if they were pigeonholed, for lack of a better word, into a situation where the only way to get out of it is to dilute to put more shares onto the market. I think this ties into what you were saying with MicroStrategy too, with when you talk about how Saylor bought at the money calls a year ago or whenever he did it, because he knew he needed to get a bigger market. I don't want to get too diverse. I want to finish. I took myself off track.
That's a very important point. Which is, let's just go back to Saylor's ATM sales, right? He didn't buy at the money calls. He sold stock ATM at the money. Okay. Now, when Saylor began his journey down that $21 billion plan of selling stock, he did so with a very specific strategy, pardon the pun, but he knew in order to have the best functioning options market on Wall Street, he needed to have a stock that was freely available to short. This goes back to what I was just saying earlier.
Exactly.
If you have a stock or an equity or an asset that is difficult to short, then the options market cannot function well because participants in the market can't hedge themselves properly. So he goes out and he sells $21 billion worth of strategy stock, right? And look at the options market today. Would Misty be possible? Would their strategy work if there were not enough shares to short in MSTR? And the answer is no, absolutely not. They would lock up the entire options market, liquidity would freeze up, and pricing would turn into a catastrophe. So in order for Misty to have a free functioning access to this options market, Saylor needed to create the landscape, right, where you can borrow MicroStrategy and there's no concern about a short squeeze. And if it ever even got close to a concern about a short squeeze, he would sell another $20 billion at the money because this is his business model.
Yes. But I feel like you interjected there because that's an important distinction to make. Is it's not about it's interesting because you hear the word short, and my impulse as a retail trader is I hear the word short and I just think something's bad with a company, so they're finding ways to short a company because there's something wrong. So when I hear the word short, I picture somebody saying something's wrong. But what you're illustrating very well for people, anybody that's paying attention or just thoughtful about these kind of things, is that shorting is a necessity. It's a healthy part of a market. It's almost like this is like the worst metaphor to throw, but it's almost like taking a dump. Like there's certain bodily functions that maybe aren't attractive, but like your body needs to operate. So shorting, being able to short, having enough liquid float of a stock is important for the health of the market to have that liquidity. So differentiating MSTR versus like a GME situation, MSTR wasn't in a desperate situation where they needed to increase strike, where they increased the float, able to have a derivatives market on top of that float. So now tying it back in to Bitcoin, and I know this is your thesis, so I'm just kind of repeating back to you what you were going to like elaborate on. This is more about me and anyone who's listening to see if they really understand what you're saying, is that all of what we're talking about works when there's paper asset, like an MSTR or a GME or stock or whatever the paper asset is. What differentiates the Misty product from all of these other products that do the similar types of strategy is that Bitcoin itself, it's interesting. Misty only kind of works because MSTR is the paper, but the actual underlying asset is Misty couldn't do what they're doing on Bitcoin directly. So they're in it's all like you just said. Again, I know I'm repeating back to you, but MSTR set up the landscape for Misty to be built atop of. But now I know, so now I want you to get into it because now I feel like I'm with you when you're making your case.
Yeah, so what we're really talking about is the plumbing, right? To follow on your analogy, right? In order to have a very vibrant and active derivatives market, the plumbing has to be built underneath what will be that marketplace. Okay, now we know in MSTR that Saylor has gone ahead and built this plumbing and will continue to build out the plumbing as needed because that's his very strategy, right? That he's going to issue financial products. The real issue becomes in Bitcoin itself. And by the way, YieldMax does have a product on Bitcoin, right? So just adding to the size of the derivatives market, right? It's nowhere near the size of Misty, but they do have a Bitcoin yield generating strategy.
Can
The
I just
issue is
stop you for, okay. I just, so again, they have a Bitcoin strategy. Like I understand how you can short a stock because of what we just discussed, but how do you actually short Bitcoin? Or is this your point?
no, you can short Bitcoin by borrowing the same way you short a stock, right? Is you borrow it from,
Wait. You're borrowing they're actually borrowing the Bitcoin.
they're
They're
borrowing Bitcoin
borrowing
from
Bitcoin.
someone who's willing to loan it to them, who's a long-term holder and willing to get paid a little bit of money, additional money to lend them their Bitcoin for sure, right? There's an
Okay.
active Bitcoin
Okay.
short market. But
Right.
again, the problem here is twofold. One, Bitcoin's a bearer asset, meaning that I can take it off the exchange, I can take it out of the bank, and I can put it in a cold storage in a hardware wallet or a paper wallet. And I've removed that Bitcoin from the plumbing.
Would that
Okay.
be like taking your house off the market? I can put
No,
my house on. No. Okay.
no.
Okay.
Bearer
What
assets
would be a better analogy?
to a bearer asset,
Yeah.
gold in a safe, right? There used to be bearer bonds. Like when I first got into the industry, you used to be able to buy bond certificates that were bearer, meaning you could take possession of them. They had little coupons on the bottom and you could clip the coupon and go to the bank, right? That's
So
how
does it
bonds used to
have to
work.
do, but because it's not, a house doesn't work because you could always build more houses and the market can just keep going on. But if I take the finite supply of something off the market and I put it in a safe, that has a
Yes.
different implication.
Yeah.
That's why
Right.
that analogy didn't work. Okay.
Right. So let's assume that the market avail of the 20, we said what, where there's 21 million Bitcoin that will ever exist. Let's take that number down to 15 million. because we still have 1.4 to mine and 5 million have been lost. Okay. And let's assume that of the 15 million, 7.5 million are held in self custody, meaning that no bank can borrow them. They're not available to lend, right? Now we're down to an available supply of 7.5 million Bitcoin. You have companies like 21 that are doing proof of reserves. Jack Mallers came out and published his wallets, right? So he's got,
right.
I don't know, 50,000 Bitcoin that you can actually see where it is on the chain. And if you can see where it is on the chain, then it's not being lent out, right?
Real quick, because you brought it up. This I find fascinating because people who understood blockchain and understand the limited supply from a blockchain standpoint and being able to like have publicly verifiable, that's a unique set of people that were able to do that. Not everybody moving into the future is going to be able to do that. But what I find fascinating about what's happening now is to use another person that we know, Grant Cardone. He's just publicly claimed that he just bought 1,000 Bitcoin and he's merging his Bitcoin real estate fund. So now he's in that game now as at 1,000 almost, like putting his marker on the board. Sailor's in the game, BlackRock's in the game, Mahler's in the game, Cardone is now in the game. All these people are in the game and they're publicly showing their statements. So whether you understand blockchain or not, just understanding the limited supply aspect of it of 21 million, the blockchain is proof. It's the mathematical proof that you're only going to get to 21 million. Everybody else that is publicly saying where they're at are taking their position and showing you this is how much is now being claimed off of that 21 million.
There you go. And you're going to get to a point sooner rather than later where the available Bitcoin that's available for loan shrinks to the point that the options market can't function. And you end up in the GameStop scenario. But it's much worse than the GameStop scenario because there is no solution. It's a problem that without a solution. You can't turn around to the Bitcoin CEO and say, I need more Bitcoin, because there is no Bitcoin CEO and there is no more Bitcoin, right? And Wall Street has never seen a $2 trillion asset that they can't print more of. Never. None. Zero. This is the first time. So we have this options market, which is growing by leaps and bounds. Every day it gets bigger. More risk management, more hedging, more institutions, more trading desks are getting involved, and they all need the ability to short Bitcoin. We have the COMEX, the Chicago Mercantile Exchange, where they have Bitcoin futures. I looked as of today, it was something like $15 billion were short on the COMEX. We have Binance perpetual futures. I think 13 billion were short over there. So just naming two little outlets, I'm up to $30 billion. I estimate personally, right? I asked ChatGPT how much Bitcoin is shorted. They said about $50 billion. Okay. I'm guessing that they're about 10 times undervaluing the short size because they don't have visibility into the transaction that I outlined for you earlier, which is an over-the-counter short transaction, right? So my guess is that we're probably at $300 to $500 billion of Bitcoin, which has been sold short. Now, again, don't think that that means that they're betting that Bitcoin's going down. That's not what it means.
Right.
It means that they are economically hedging risk, right? Let's say there's 300 billion that are really sold short, with assuming I'm right, maybe 1 billion is betting that the price is going to go down, right? The other 299 billion probably want the price to go up, right? But they have to hedge their downside exposure. Now, what happens when we run out of Bitcoin? When you can't actually find somebody to lend you Bitcoin? What happens to IBIT? What happens to the other ETFs? What happens to the COMEX, the futures? What happens to the perps on all of these exchanges? Coinbase, Binance, Bybit, Kraken, like just go right down the road, right? Like there are derivatives trading everywhere. Deribit, which Coinbase just bought, gigantic options exchange. this is again, ginormous complex of derivative exposure to the underlying asset of Bitcoin. And at some point, Bitcoin will become hard to borrow, right? Because just you can't continue to grow in an asset that's infinitely scarce. Those two things are antithetical to each other. So what I'm suggesting is we are running headlong into what will be the next big inverse big short, right? What we're going to see is a scenario where you can't short Bitcoin. People that are short Bitcoin begin to get scared. They need to buy back their Bitcoin because remember, you can take delivery of Bitcoin, right? So if you envision a scenario where you can actually say, wait, I'm getting scared because IBIT is getting hard to borrow, right? The ETF. And this happens to ETFs, okay? And all of a sudden, sophisticated investors say, you know what? I'm going to take my Bitcoin into cold storage. I'm just going to yank it off of Coinbase, right? You're actually literally walking up to a fire with a can of gasoline and dumping it right onto the fire.
So I got to stop you because I mean, there's some dark side here because you said what's going to happen to these institutions. And I'm like, this is going to be interesting. Like, what's going to happen? Is IBIT going to get more valuable or less valuable? Because at first I'm thinking more valuable because if the underlying asset is Bitcoin, then the price is going up.
Yeah.
But then I got nervous because you said they need to be holding the asset. So when you're talking, this is where the cold storage story comes into play, because if you're holding it in cold storage and you take it off the market entirely, what are these people going to do? Because they can't even buy it from anybody because it's in cold storage.
Look, the only solution would be much higher prices, but I don't even know if that's a solution, right? Because as more Bitcoin gets pulled into self-custody and forces more people to cover, then of course you're going to have very smart hedge funds like Michael Berry did during the big short that say, wow, I'm just going to buy Bitcoin and I'm going to hold it in self-custody and this thing's going to spiral up and it's not going to stop.
Which is just going to fuel the fire. It's just going to fuel the fire.
Like we have this setup that's been created by what I think are misguided Wall Street execs that have been pumping the derivatives market inside of the Bitcoin complex that don't realize that they may be pumping their own demise. Because if Bitcoin were to go, let's say, X in a short period of time, and I think the example I used was 2008 Volkswagen Porsche, that short squeeze, right, which was monumental, right? If Bitcoin X in a relatively short period of time, let's call it a month, what is the net effect? What happens to some of these contracts that the banks have, these OTC contracts, that they can't make good delivery on because they begin to fail? So you have this asset, Bitcoin, which is sort of divided right now between a bearer asset, let's say 50% of it is a bearer asset, and 50% of it is a fiat asset, right? Because it's held inside the fiat system. Coins on exchanges, coins, in banks, coins that you're borrowed against that are pledged, right? So you have this two-tiered asset, right, that is uniquely positioned to run over the fiat side, right? And there will be knock-on consequences to when this occurs. So let's just talk about one. If Bitcoin were to run from 100,000 to 1 million, 30 days, right? What is the net effect? Well, a lot of shorts are going to be wrecked. Right? Potentially broker dealers are not going to be able to get their shorts back, albeit they thought they were hedged, but they can't get out of the one side of the hedge, right? This is what we call counterparty risk, right? You think you have a trade where I'm long here and I'm short here, but in reality, your short side doesn't pay because they go bankrupt. So now you only have one side of the trade on, right? So either you get smoked, one person in that transaction gets absolutely killed, right? And can't honor his commitment. And that's counterparty exposure. We saw this in 08, 09 with Lehman failing, okay?
Do you think something like this happens to Coinbase?
Well, we don't know how Coinbase is positioned, right? So if Coinbase is in good shape and they've taken the proper steps, then in theory, they should be okay. If they're not well positioned,
What would be the proper steps? What would a company or someone who had this awareness that you have, because it's not a nefarious thing per se, it, like we
no,
set
not
up
at
in the
all.
beginning, it is just inherent in how the plumbing
Yeah.
works.
So
So
if
when you
Coinbase,
realize this,
yeah, if
yeah.
Coinbase Institutional has all the Bitcoin that they've lent out and they have the ability to just take it right back because they custody it, then in theory, they should be okay. It doesn't mean that investors at Coinbase will be okay. But in other words, if they're meticulous and they're doing their job the way they should, and they don't have IOUs with other big banks, if they don't have IOUs with Goldman Sachs and Morgan Stanley and Deutsche Bank and Society Generale and UBS, like we just don't know because they don't publish proof of reserves, right? So nobody really understands what Coinbase has, where it's located,
Can you
what
see a
what exposure
time
they
where
have.
they have to make that knowledge, make that information public? Because it seems like it would be relevant to an
Well, I mean,
investor.
this is one of the great promises of Bitcoin, right? Is that the way to solve a financial system run amok is with a financial system that can be audited and verified by every participant on average every 10 minutes, right? Through the next block and running a node, right? That literally solves the problem that we had in 0809 where nobody knew anything about anybody, right? And the entire system locks up because you can't trust anybody, right? You don't know if your counterparty actually has the money they say they have. Right. So the answer is, yeah, it does solve the problem, but maybe we have to have a massive crisis first before the regulators and the government says, look, we're going to use this Bitcoin blockchain to make sure this never ever happens again. Everybody who's in the banking business is going to have to show proof of reserves. You can't claim to have Bitcoin unless you show where it is on the blockchain. Well, that solves all of our global financial problems in one fell swoop. No, not all. Let's say an overwhelming majority of our global financial problems would be solved by meticulous proof of reserves.
There's almost like a judgment day quality about this. It's like we are headed to something that's inherently inevitable for the reasons that you've outlined and articulated pretty well here, that at some point, and I've heard you say this, where you're like, I don't know if it's a year from now or months from now or, decades from now. I don't think decades, but 5 years, like 5 years from now or 5 days from now. At some point, people are going to have to come to this realization. It's one of those things. Once you see it, you can't unsee it. So people who are knowledgeable of such things are going to come to this realization. Let's talk about the people like that, like you say, the hedge fund managers, the people that are playing with large numbers, that it's going to impact them a lot more to not do some type of proper risk management on this. And it's going to happen fast. It is going to, because it's like, that's the thing about a short squeeze. I remember being in my first trade that I witnessed a short squeeze happening, but I didn't know what it was. I was reading charts, like I like to read charts, and then I just see the stock is going up and up and up, and I was like, certainly it's coming back in. And then it's like I buy the dip, and it's like, no, it keeps going up. And you're like, well, now it's ridiculous. Certainly it's coming back in. And if you don't know what you're involved in, those things just, you're like, what the heck just happened? It's like this very strange kind of move on a chart. Now that's just like looking at a small stock in a trade. What you're talking about is institutional sized, like I'm like in
Yeah.
terms of
And
magnitude.
well, with Bitcoin, remember the problem's even worse in as much as nobody can value a Bitcoin. No analyst can come up with the price. There are no metrics. There's no earnings, right? When GameStop went crazy, well, you can look at GameStop's earnings and look at their sales and look at their assets, right? Like there's all these different metrics by which you can say, okay, this is getting really stupid, right? But with Bitcoin, if it was trading $1 million tomorrow, it's a number. Like there are no metrics, there's no sales, there's no price to earnings, there's no price to book, There's no revenue numbers or assets. It's just a number, right? So in the case of a Bitcoin squeeze, I'm not sure that this thing's going to be easily fixable, right? Like, matter of fact, I know
Yeah,
it's
it
not.
doesn't sound like it.
Right. Matter of fact, it could just continue to get worse. And then the question becomes, well, if Bitcoin trades $1 million in 30 days, right, isn't that the same thing as printing $20 trillion worth of wealth? Well, yes, it
Yeah.
is. Right.
Yeah.
So
Yeah.
because Bitcoin is easily fungible, you will now, if you think that printing $800 billion during the GFC was bad and $7 trillion during COVID was bad, imagine printing $20 trillion, in the next month, and see what that does to inflation, which would just drive the Bitcoin price higher. Right. So we have got ourselves into a pickle, to say the least. We being the global financial community, as a Bitcoiner, look, this is the reason from even well before the GFC, I was a gold bug because I understood the system was fragile, right? I wanted bearer assets. I didn't buy the GLD. I bought gold bars. I bought gold coins. I bought silver coins. Along comes Bitcoin, and you realize, wow, this is a bearer asset that is so far superior to gold and silver. So I began to buy Bitcoin in 2013, right? And I've told that story in our previous podcast.
Yes.
So look, this story, the inverse Big Short. Let's coin the
The
term.
big long.
Right?
Yeah, the big
It's the
long.
big
Let's
long,
go for it.
right?
Yeah.
I don't think that people really understand the knock-on effects. I think people get the fact that Bitcoin can be number go up. But they don't understand is that it can become a systemic problem literally overnight. In a matter of weeks, you could be going from number go up to banking system go down, right? Because they just can't handle the losses that they would need to take in order to cover their shorts and counterparty failure. Again, you end up back in the same situation we were in 0809, but multiply it by infinite factors. And remember that while Lehman was an unbelievably catastrophic situation, it was local. It was localized, right? They were able to contain it. Wall Street was able to contain the problem. This is different. This is a global asset. Whether you're in China or the US or Europe or South America, you have access to Bitcoin. Banks have access to Bitcoin. People are writing loans against Bitcoin. There are all of these different things going on in the Bitcoin world, in the Bitcoin complex, that I don't know how the system deals with systemic risk that comes from what's invariably going to happen at some point. So that's why I've been ringing the alarm bells on this subject.
Yeah.
And look, I get a lot of pushback because a lot of Bitcoiners and very brilliant people, like some of the original cyberpunks, they think they can debunk the paper Bitcoin narrative. They view it as a narrative.
Yes.
Right? But as a guy who spent my career on Wall Street, I ran a self-clearing broker-dealer, right? So I was a DTCC member. I was an OCC member, right? I understand how this plumbing works. So the same way they understand the plumbing of Bitcoin and the exchanges and the difficulty adjustment and the miners and all the different little components that go into even the ultimate minutia of Bitcoin. Now, I have that same understanding of financial markets and specifically derivatives markets. And I can tell you that without a freely available to short and an extremely liquid underlying asset, you are going to get to a point of full lockup, especially as this thing grows. Right.
Wow.
And look, you can deny it, you can not get it, you can just look at the perps and look at the COMEX and look and just add that all up in your head. But that misses the point of all of the upstairs derivatives, over the counter derivatives, private
You're
contract derivatives.
you are a real whisperer in the sense of you're like I'm like is he a TradFi whisperer or is he a DeFi whisperer or is he just like the bridge between those two worlds to talk about how these two unfolding narratives. I think that's why I find all of this so compelling and I love talking to you so much. And I think that's why so many people love listening to you and following you. So if you're not following this guy and any of this stuff is interesting to you, definitely have to check in on one of these spaces. I think that's what's so compelling because that feels like the narrative of our time right now in the financial, if you're interested in finance and money, this is, I can't think of a larger narrative happening than the convergence or whatever term you want to use of the traditional finance world, the TradFi, and the decentralized finance world. And they are the decentralized finance is younger and coming of age, and traditional finance has been, I don't know how many centuries, years old. And if you want to go back into like the BC era and when we were trading with like a bartering system, it's like, how old is that? But like this emerging systemic way of exchanging value between individuals and this like peer group. And I don't want to go too much off of it because my thing was that I do feel like you're an excellent bridge for these two things because it's not about there's a right and a wrong, but it's about understanding how the dynamics, again, going back to the plumbing analogy, it's just understanding how the complexes work together and how they affect one another. And I mean, I can't even think of anything more relevant for this past week since we didn't even get into the bigger things that are going on, like the stable coin bill and things like that. And I won't because it's 155, like we're already in it. So I'm not going to try to confuse this topic in and of itself, because to your point, it's hard for people to understand if they don't take a pause and like kind of talk through these things, which is why I love having you on the podcast. Because again, in the spaces, it's a lot of voices. It's a lot of kind of people trying to talk, not necessarily intentionally. It's just a communal experience, and it's natural in a communal experience to have like a give and take. But in the podcast gives me an opportunity with you and people who are interested in what you're saying to kind of pick these things apart a little bit more in depth and to think about them more contemplatively and to, because again, going back to what you said, once you see it, you can't unsee it. So it becomes that compelling story because I'm like, I don't know how this is going to play out, is to your point. It's like now, and again, I don't care how high the price goes. What you're explaining is like, another potential. I don't want to put words in your mouth because you're saying the big long. So there's still like a positive aspect of it, but it's another potential crisis. Right. I'm minimizing it because I don't want to absorb all of it at once. But yeah.
A spot, a place where a citizenry demands their government's transparency through Bitcoin, through a blockchain that's auditable and verifiable on average every 10 minutes. Like that is the solution to the problem. The issue is we haven't had the real problem. The Fedsters, the fraudsters, the banksters, Wall Street, they still have their game, right? And until that game breaks and breaks hard, we're stuck in this loop, this doom loop of inflation, of what I would call mischaracterization of economic numbers. I would even argue, my friend Infra does a great job of kind of laying out what we call the silent depression, right? That since 0809, one can make a very good argument that for 70 to 80% of America, we've been in a depression. Housing's become unaffordable, the suicide rates at all-time highs, society's being torn apart at its fabric, at the fabric level, right? And that inside of itself, one would argue, is a depression, right? The only issue is that the wealthy, the people closest to the money printing tap, are making so much money buying fourth and fifth homes with cash. But, like just ridiculous amounts of money are being sucked out by those closest to the money printer. That a little bit of that money filters down eventually to the bottom 80%. But remember, 50% of America doesn't pay any tax because they really don't make enough money. And we know with the inflation we've suffered, the idea, the American dream, which I guess is a home ownership and two family mother and father home with mom staying home and raising the kids, like that's pretty much gone for 80% of America, if not more.
I
It's
don't know
pretty
the
much,
statistic on that, but that is a scary thing to think about
yeah,
because
it's pretty much gone. Even high net worth individuals today are two family, working parents. Childcare has gone through the roof. Insurance
right.
has gone through the roof. Health
That
insurance has
that's my
gone through the roof.
experience. Yeah,
Yeah,
that's my experience.
yeah, it's really, really bad. So this concept of this silent depression, right? And you combine that with this potential for a financial crisis, and we know that we're gonna have a financial crisis. I mean, in my life, it seems like every 12 to 15 years we have a financial
Right.
crisis,
Right,
and
right.
so we're about due, right? And my question is the asset that was built to destroy the financial system actually going to destroy the financial system?
Well, here's the thing, because I'm like, man, there was something I wanted to tap with you, and you re-triggered that. Is I'm concerned that based on what you're saying, and I'm not, I have to caution myself. I'm like, I don't. It's funny when you give the disclaimer, you bring it up, but it's like I don't consider myself an alarmist or conspiracy theorist or tending to like just be into those stories. I like narratives and stories, but I like the plumbing and understanding why those narratives exist. And I get nervous because you said earlier that this is a potentially an enormous, a ginormous, gynorm, whatever you want to call it,
Ginormous, yeah.
ginormous problem. And I'm concerned that the same corruption that likes to hide other things because they think they're doing it for public safety or because they just don't have an answer and because there's not enough knowledge around Bitcoin to understand really what it is and how it works, that they can spin some kind of bizarro narrative around this to try to fix the problem that you're talking about potentially that we might be facing.
Yeah, there is no good narrative. I mean, this is where we get into some scary stuff, right? What happens if we do see multiple money center bank failures? Let's just even giving the US policymakers credit, which it's hard for me to do, but let's just assume it comes out of Deutsche Bank, UBS, Societe Generale, three huge European banks. You could probably throw a few Asian banks into the equation, right? Japan's a hot mess. If this unfolds and it even comes out of Europe or Japan, right, and it begins to take down the US, because all of these banks, through private derivative contracts, have such counterparty exposure to each other. And look, I'm not a huge Warren Buffett fan, but he's been screaming for years about the derivatives markets, right? I think he called them a time bomb, and he has overtly expressed what I'm expressing, right? Now the difference is that in many of these assets, like commercial real estate, everybody who's going to listen to this podcast knows that we have a massive commercial real estate problem post COVID, right? With massive write downs, buildings that people paid $500 million for are now selling for 50 million, right? Like just crazy things are happening. But somehow it's getting papered over, right? Like you just said, the corruption, it's for our own safety. The banks are fine, everything's fine. We don't know how they're papering it over, but they're papering over the problem. The difference with Bitcoin is you can't paper over something that's auditable and verifiable. Not you can try, but it's an effort and futility. Right?
If you're
'Cause I
in
can go,
cold storage, if you're
yeah.
in cold storage, is
Look,
it audible still?
Mark, you have to
Yeah.
understand something. Our government got rid of paper bearer assets. I talked about bearer bonds. They used to be the de facto way that people bought bonds. They bought bearer bonds. They held them in their safe at home, right? Like they had the bond.
Right, right, right.
Why did the government get rid of them? Right? Why? Well, because they didn't want people to be able to suck the liquidity out of the system in times of fear. Now you have this asset, Bitcoin, that you can suck it out in a matter of seconds out of the system. So it's almost like a bank run on steroids, of the likes of which the government knows that they can't stop.
A bank run on, you said it's like a bank run on steroids.
Yeah,
Bitcoin is the
because
bank.
you can
Bitcoin is
suck the
the bank run on
liquidity, you can
steroids.
suck the out of the entire financial system by taking delivery of your Bitcoin,
Right.
right? Like
Right.
if
That's the run on the bank scenario,
there it is.
but it's
So in one
Bitcoin
case,
and
you
it's
go
in
to the
cold
bank and you take
storage.
out. So here's the difference, right? In the case of a bank run, you run to the bank, you yank out your money, you yank out every piece of cash you can get out of the bank. We know the bank doesn't have enough money to pay all its depositors. So eventually everything begins to fail. The government prints money, and the solution to the problem is to devalue the money that you pulled out of the bank. In a Bitcoin run, okay, it's the exact opposite, right? As you pull your money out, it becomes more valuable, not less valuable, because they can't print more. The solution to the problem will not be to dilute the amount of Bitcoin, because that's not possible. So yeah, we are setting the stage for the big long, the inverse big short, whatever we want to call it, right? The ingredients are there, the plumbing is there, everything is there. It's just a matter of if, when, not if. This is going to happen, right? Like this is almost a certainty. When I look at, when I'm able to step back and apply my domain expertise of understanding plumbing of Wall Street, this is going to happen, right? Like I can't envision a scenario in which it does not happen.
When this happens, I'm going to make sure that we have lots of good clips from this episode. So we have it for prosperity, that you were someone early to see this, because you're certainly early in my mind. I'm not aware of it. You have you on to actually hear from you directly to hear your case. And I think, like you even say, even in the spaces, there's, it's a back and forth. It's a back and forth, but it's like how many people understand it at this depth, which is why I'm doing this podcast, so that the people that do listen to your spaces and the people, that community that you've built around you, can have like an informative resource, like to hear you be able to build it out more clearly so people can fill in their own holes in their mind. I think I used this the last time I was with you. I'm like, oh, I had all these holes that you're just kind of filling for me, so my neural connections are stronger now because of having talked to you. So do you have any final thoughts on this before we wrap it up?
Yeah, look, let's end it on a positive.
Yes.
As I've
Yes,
sort of
please.
touched on earlier, the solution to a lack of transparency is transparency. And this is what Bitcoin offers us. It offers everybody in the globe the ability to audit and verify what our government's doing. So we have this new chance. We have an opportunity to stop our government from spying on us and allow us to spy on our government. Or better said, let's stop surveillance of the individual and let's surveil our government, right? And I think
Wow.
that's where this is headed. That is the solution to our problem. I just think getting there is going to be very painful. I think Bitcoin in self custody is the off ramp. It's what provides you security in the event this happens or when this happens, right? I think that is the ultimate safety guard, because remember, the financial system is going to try to take your Bitcoin, right? They're going to try to take it, whether they do it through a great taking, the David Rogers Webb approach. And I encourage everybody to watch that video. It's on Rumble, it's on YouTube. Maybe we'll
What's
post a
it? What's the
link.
video? Can you say it one more
It's
time?
called The Great Taking. And
Okay.
what it describes is the laws and the regulations that have been installed since the Lehman Brothers collapse that enable the government to take Bitcoin or any other asset, any stocks, bonds, derivatives that are in the financial system as a means to recapitalize themselves. It's a
Yeah.
scary, it's a very
It was
scary.
positive and then it got scary again. But
Well, it's
the positive,
dystopian, but
yeah.
again, what I think is the positive is where this is going to end, right? I think getting there is going to be difficult. But if you
Yes.
take the right steps, if you protect yourself by saving in Bitcoin and self custody, right, I think you're going to have the solution instead of
I
being
love,
sucked into the problem.
yes, the positive aspect. I love that, the transparency of it. And I love how you said it too. It is, instead of like the NSA watching you, or just thinking about the government watching you. It's a checks and balances system where where the citizens of the government can honestly look at what's on the books of the government, and the government, because they know that the citizens can do this, remain more integrous, and maybe we can start trusting each other again, citizens to citizen, government to government. That would be a very, in my mind, more of a utopian, and hopefully not like a la utopian, but that would be a more ideal scenario, is that we play to a stronger system, a healthier system.
You had me at hello.
Yeah, right. I know. Man, I so love having you on. I'm going to ask you one thing that I may or may not have in this because it's a little bit out of the flow. I'll see if I can edit it back in. But when I was thinking about Coinbase and how they could protect themselves, I got a sense of like maybe they could self custody, like the institution itself can cold storage. They can cold storage what they need to protect themselves in the same way an individual.
Funny you mentioned that. Brian Armstrong, CEO of Coinbase, tweeted out yesterday or the day before, "We're buying Bitcoin every week."
Right.
So, look,
so the
solution to this problem is that the government buys Bitcoin, companies buy Bitcoin, individuals buy Bitcoin, and we solve the problem before the problem gets us.
Right.
But again, from a derivative standpoint, I don't see a solution to the big long, the inverse big short. That's coming, right? We are going to see Bitcoin do something that, very few assets have ever done, in as much as you're going to see a squeeze.
That to me is just incredible. I love this. I hope I love when I interview you, because when I actually go back and can actually watch what we discuss and reinforce a lot of what you're talking about. Because I think if you're just hearing it for the first time, maybe a few things are over your head or something gets past you. Maybe you don't understand what a short is. Maybe you don't fully understand the Bitcoin aspect of it, or the derivatives component, because there are a lot of moving pieces here. But if you listen to it, there's like a holistic nature to it. And it's readily available for anybody to understand. It's not like either one of us is trying to hide something from anybody. Quite the opposite. We want everybody to be as educated and aware as they possibly can be, so that they can appreciate the full gravity of the situation and to take preventative measures or do what makes sense for them to do. I love that concept of being the bearer. I rarely think about that, but it's true to actually have an asset that's in your possession, that you feel true ownership of, that unadulterated true ownership of that asset, in that it's not an asset that can be manipulated by external variables, whatever they may be. So I love that as a takeaway for me personally, and I'm sure there's a million takeaways. I hope there's at least a bunch of takeaways for anybody that's watched and listened to us for now about an hour and 15 minutes, which I love. I think that's like the sweet spot for us, is that 1:15. So thank you, DarkSide, again for being on the Money Adjustment, and I might have to change the name to this to the Bitcoin Complex Weekly or something, because I really love having you on, and hopefully as I'm listening in on your spaces and know that there's something that we can delve in deeper together, that we can do that and have a little audience around that. Yeah, it's your audience. So anytime I have you on, I try to really respect that. And thank you everybody for watching this episode of The Money Adjustment, and tune in for the next one. I'm going to try to have DarkSide on as much as possible. Thank you again, DarkSide, for coming on.
Thanks, Doc. Really appreciate it. Great time, as always.
Yeah. That was awesome. Thank you for watching this episode of The Money Adjustment. If you want more, like, comment, and subscribe. You can follow me on X at Marc Kramer. Until the next episode, stay healthy and wealthy. Man. Yeah, I'll let it run, but like we could keep it casual and whatever. That was really good, man.
Yeah,
you really
that's
helped.
Really good one. I'm looking forward to it. I tell you, I put out a tweet on this subject today that's gone sort of a little viral.
Okay.
You might have seen.
Yeah, let me know what it is. I'll take a look at it right now.
Here, let me send you the chain. Yeah, well, I'll send you Adam Back's tweet, and then you can look at the chain, and then where I hopped in and.
Okay. You're sending it to me via X, right?
Yeah, I'll send it to you right now. So this was Adam Back's tweet. And now you can read down.
Paper selling. Yeah, cool. All right, I'll find where you count where you were in on there, 2 cents on it, and then I might use that to help kind of plug and promote what we just did here. It's really cool. Like I know we talk about it, you and I go back and forth, like, oh, we should do these, regularly and scheduling and everything, but I'm going to try to just stay on you a little bit because I like that we can get this hour in. And honestly, like, and just like, this is all this, I don't make money from this. This for me is just like work, but it's because I know I'm gonna have to edit and do the stuff on the back end, but I feel the value in the sense of the knowledge that you're bringing to the table. And I know that it's well received because when I post, these are the ones people go nuts on and want to comment on. And I really love to hear what you have to say. Yeah. Thanks again, man. Are you doing a spaces right now? Are you starting a space?
No, I see that Fred's got one going, but I'm going to go see what the wife wants to do. And we're going to the rodeo tonight. We're going to a movie this afternoon. So I
Oh,
kind
I
of
love
feel
it,
busy.
man. Have fun, dude. You earned it and enjoy it.
All right, brother.
Take care.
Thanks,
Bye.
man.